What's happening, Hardscapers? This is episode 322 of the How to Hardscape podcast, where we talk about how you can start and grow your hardscaping business. And on today's episode, we have 7 sound clips that have really stuck with me from starting this podcast all the way back in 2019. Things that they've said, topics that they have covered, from branding your business, selling your business, to profits. And some of these things other guests have absolutely touched on. These are just things that I've gone through my catalog, listened to the episodes again, and just really digested them a little bit more over the years here. So going back to 2020 interview in this episode all the way to an episode this year. And I'm just going to talk about things that I took away from these and how I've implemented different variations within my own business. But before we get into today's episode, we want to say thank you to our sponsors. Cycle CPA. If you're looking for bookkeeping, accounting, CFO services, reach out to Cycle CPA at cyclecpa.com. Let them know How to Hardscape sent you for money off their services there. Patio SEO has hopped on board as a sponsor, and they are a leading marketing and brand building company in the hardscape industry. And if you don't know, this company is run by James Reed. We've had him on the podcast a couple of times, some of our more popular episodes, and he owns hardscape businesses across the country. And now you can have access to the same in-house marketing team that he has access to at patioseo.com. So if you're looking for a killer website, targeted ads, or data-driven strategies to grow, check them out at patioseo.com. August 19th to the 20th, Knowledge Tree Consulting is having another event at Koivik. This event is in Toronto. Koivik is in Milton. I went to their event last year with Earthscape. It was awesome. I can't recommend this enough. There's going to be a link in the show notes for you to sign up for it and get 50% off your tickets today. If you're planning to go to Hardscape North America in Louisville, Kentucky, October 22nd to the 24th, you can use promo code VIPHTH to sign up, get 50% off your registration. That also gives us a little bit of a kickback and helps us here at the How to Hardscape podcast. And without further ado, let's get into today's episode. This first soundbite is from James Reed. Now, we've had James on a few times on the How to Hardscape podcast. This is from his second interview, and he did touch on this in the first interview, and we've had tons of guests touch on these aspects, but nobody that's really gone deep as James has as to how much he spent on just the domain for the www for his actual landscape business, and how seriously he takes branding in his business, from really deciding to go specific in the type of client that he wants to bring in, naming his business around that, and then branding and marketing his business for those clients. And this, along with other episodes, we've had Mike Michalowicz on the show. I read his Pumpkin Plan book about the idea of cutting out the noise and those services maybe that don't yield the majority of the revenue or profit that really comes into your business. And it's something that I've juggled with over the years. For example, we've had masons on the show that do beautiful work and are very much in tune with their craft and the art that they do. And with this is the recurring theme of the difficulty of scaling an operation like that. That is very much an art form, and that could be applied to a full design build business, and how that is a little bit less difficult than, say, masonry work, where somebody really has to be trained in that art form. But on the other end of things, a lift and relay business would be a lot easier to scale based on not really needing a whole lot of skills that really goes into that whole design build aspect, and the amount of things that you need to know and teach your employees when it comes to that design build projects that you might take on, and all the different aspects that go with that. So a lot to think about just in this small clip of James talking about this, but it's something that I've been toying around with in my own business for many, many years now. And then we're going to get into talking a little bit more about branding here. First and foremost, that like hyper focus on a single kind of service.
Yep.
How were you able to, cut out those other things and kind of focus in on a specific clientele that's looking for that specific service? Because shiny object syndrome. People come in and they want you to do more, and this is maybe not the right client for us. How are you able to kind of push those clients away and focus singly on that one?
So funny you say that. Very relatable, and I don't remember what I've said already. But when I first started, I did everything because I was just like, "Oh, a fence, $5,000, I'm doing it." It probably cost us $6,500 to do the fence, but in my eyes, I was like, "Oh, it's money. This is great. I'm going to definitely do it." So what happened was me doing everything. When I started to build the team, we actually weren't like profitable, and I was getting super stressed. I couldn't make payroll sometimes, like normal grind that people dealt with in the beginning of the businesses when they were chasing the shiny objects everywhere and going after it. Then my mentor at the time, who was like a customer of mine, that I like just broke down crying, like not crying, tearing up to him because he owned a very successful business. But he's like, "Oh, how's business?" I was like, "I need this pay that you're giving me now just to make payroll. Like this, it's not good. I'm working 100 hours a week." Very relatable to a lot of people. That's when he was like, "James, I just have a question. What's the simplest job that you do that doesn't need you that makes the most profit?" And I'm like, "Oh, we just did like a 20 by 20 and I set the guys up and that was it." He goes, "All right, there's your answer." And I'm like, no, I try to like talk him out of it that it wasn't the answer. And I'm like, "No, look, I'm featured in this magazine and I'm featured in this magazine. Look at the work we do." He goes, "Were those jobs enjoyable or profitable?" I'm like, "No." He's like, "All right, there's your answer." It was like the fourth time, and you know how it is, me arguing with him that he was wrong to getting back to it that it was right. Then how Affordable Patio started was he was like, "Hey, why don't you just start creating sizes that like look really, really good that you can execute in the most amount of time, like that everything just works out." So I did that, and I come from like a lower middle class family that I actually showed my parents like a 15 by 20 with a fire pit and a sitting wall was like $5,100. You're talking about years ago, way before COVID, years ago. And the first thing my mom said was, "Wow, that's affordable." Because in her head, she couldn't afford it no matter what, because that was expensive to have pavers, right? Where it wasn't, you just weren't informed. And then that's where I created affordablepatio.com and invested, which is one of the things we talk about, invested a lot into the brand. I bought the domain for $14,000. And people are like, I said, look at your reaction. My domain's probably worth 150, 200 grand right now, maybe more, just the domain. So like, that's a sick investment, like, right? And you can never build a brand if your company, and no offense if it is, Mike's Hardscape or Mike's like patios, it's just not a brand, right? It's a very hard brand. So when I bought that, I'm like, wow, I already see this as a multi-million, $100 million company. So then I kind of ran with that. And then advertising that, we're not getting the high-end jobs because I'm a car guy. I've said this before hundreds of times. I'm the Hondas and Toyotas on the road. I'm not the Mercedes, BMW, Lamborghinis. No one that wants a Lamborghini is going into the Honda dealership. So it's very similar. Like, it's Affordable Patio. When you go on our website, when you see our ads, everything is that cookie cutter for the middle class that has, back then, 3 to 10 grand, but now it's like 7 to 20 just because of inflation and the cost of everything.
We want to take a break from today's episode to talk about marketing. Are you looking to take your hardscape business to the next level? Well, this is brought to you by Patio SEO, the leading marketing and brand building company in the hardscape industry. And if you don't know, this company is run by James Reed, who owns multiple hardscape businesses across the country. And here's the kicker. You're not just getting access to any team. You're getting access to the very team that helped grow James's own companies, plus hundreds of others in the industry. Whether you need a killer website, targeted ads, or data-driven strategies to grow, Patio SEO has got you covered. They've been in your shoes and know exactly what works. We've had James Reed on the podcast a couple of times, and they're some of our more popular episodes, talking about branding, talking about how he's built companies across the country. And with that, he needs lots of leads, which means he's had to perfect his branding and marketing. And now you can have access to that same in-house team that he has access to for his own hardscape company. So if you're ready to build your brand and see some serious growth, check them out at patioseo.com. That's patioseo.com, or follow James on Instagram at road to 100ms. That's road to 100ms. Let's get your business the attention it deserves. Now back to the episode. This next episode is Randy Tumber. He actually does natural landscapes, and his episode was incredible, just talking a lot about design. But in this specific clip, he talks about branding his business to get the clients that he's actually known for, what he did. And it's all about branding in the sense that during his time, what that looked like was getting out there, signing up for associations, getting involved, writing articles for magazines and getting these awards. And this really had me thinking at the time, because I was just starting my YouTube channel and deciding, like, do I really spend this much amount of time on the YouTube channel? What is this going to do for my actual landscaping business if I was going to continue to pursue this? And I really just ended up on that, the digital marketing side of things, the creating content, the creating the long form videos, in my opinion, is really the nowadays the present form of that branding that years ago would have been writing articles for magazines. And perhaps that's still a good, fruitful route to go down. But for me, I really see it as the personal brand side of things, the making the content, publishing it on Instagram, YouTube, Facebook, whatever that might look like, because this is the media that the younger generation is growing up with and will eventually have the capital to spend on an outdoor living space, on their interlock, on their retaining walls, and so on and so forth. So this really had me thinking. And at the time, this was back, I believe, late 2021, 2022-ish, right around the time that I started the YouTube channel, and thinking about whether or not to really double down on this. Is this the right thing to do, to spend my time, because it is very time consuming? And my conclusion was to stick with it, obviously, and it's really helped my business since. How long did it take for you to kind of get that ball rolling, to become really known as the natural landscape design guy and build guy? Like, in terms of like a timeline, or was there a certain project that kind of put you over that hump where people really looked to you yourself as that natural landscape design guy?
I think what I tried to do right from the very beginning was to try to promote a prosperous corporate image. So I wanted people to have confidence in what I was doing. And then I became a member of Landscape Ontario Horticultural Trades Association, which is also a member of Canadian Nursery Landscape Association. I'm also a member of the Pool and Hot Tub Council of Canada, and the same with the Pool and Spa Association in the States. And I'm a member of ISA, the Arborist Society of Arborists of America. I am trying my best to become recognized as a professional in the industry. And so I was very proud to put those logos or decals on my equipment, on all of my equipment, on all of my signs, and promote the organization and associations as much as possible, because that's the only way you really have of delineating between Smitty's Landscaping and Restaurant Supply or somebody who's legit. And landscaping, if you got your dad's truck and a wheelbarrow, it's pretty easy to get into and out of. So lots of college guys will do that, and good on them. But like airline pilots, firemen, guys like that will do that on the side, and that's fine too. But to try to convey the concept that you are a duly qualified professional, and I did do the exams, and I did receive my international designation as a a certified landscape designer as a member of the Association of Professional Landscape Designers in the States, and that's worldwide. And also, I'm a certified landscape designer through Landscape Ontario, Canadian Nursery Landscape Association, as well as a certified horticultural technician and ISA member, etc. So these are the kinds of things that I tried to do as a periphery of professionalism. But I also wrote articles for magazines. I received a lot of coverage in the media. We won a lot of awards. By being members of some of these associations, you could win awards and receive lots of media attention. And in through the pool and hot tub associations in the States or in Canada or the landscape associations, I've been able to receive lots of awards and provincially, nationally, and internationally. So when you start to get that, you start to get a lot of exposure, and then you start to get demand. People start reaching out. I'd like to talk to this fellow. And so then when you go there, I didn't go there with a slick sales pitch or anything. I just went there very sincere, very genuine.
Continuing on with the topic of branding and then transferring over to actually selling a business is Corey Ballard. And in this first part with Corey Ballard, we get into the topic of branding with the undertones of, getting into selling your business. Did you think you were going to sell your business when you were first starting with it? What were you doing to improve that sale value, etc.? And he really just dives deep into branding and what he saw his business and making it look professional. And it wasn't really his idea to sell. And then when that opportunity arose, he had that business that he really did focus on the branding, and it was a sellable asset, especially with his business being a more recurring revenue business model. And then I asked him about what was the most appealing thing to the buyer with Perfect Cut, his business at the time. At what point in that journey do you start to think of Perfect Cut as something that you can sell in the future? At what point does it kind of click that you can start to build a scalable business that it may appeal to an outside company looking in on it, that they may want to purchase it? And what actions did you start to take from that point to create this business that you could sell in the future?
Mike, I really never thought about selling the company. I loved what we did. I loved what we were doing with the brand. I really enjoyed that we offered opportunity for other people to not only work for us, but grow and join. And I had a guy that started working for me that eventually became a business partner. And today he's the president of Perfect Cut. I saw incredible skill in him. He's a great salesman. And I said, hey, Matt, if you can go out and sell, you go get work. You're great at selling. I'm great at operations. My dad's great in the shop. He'll keep our junk running. We were starting to get better equipment finally, but when it was still a lot of equipment. And so, I never thought about really selling the company. I thought I would do it for forever. But one of the things that we did do from day one is we really worked hard on our brand. Our trucks are blue, and that was non-negotiable for me. Our trucks were clean. Our guys were in uniform. Even when we were very small, we operated like a much bigger company. We always wanted to look bigger. Maybe that was ego and pride and me trying to prove to all the people that said I couldn't do it. So even when we had 4 or 5 crews, we looked, people would say, man, I see you guys everywhere. You're huge. And I'm like, well, we're not really. But, if 5 white trucks drive by you, they don't notice. If 2 blue trucks drive by you, they think that you're everywhere. So I knew from the beginning I wanted to create a strong brand. And, and many times, actually, I thought about changing the name because I felt like Perfect Cut, maybe just pigeonholed us into sounding like we just cut grass, or people even used to joke, oh, do you guys cut hair? It's like, no, we don't cut hair. But we had built such a good brand with Perfect Cut, and it was catchy enough that it worked. And, so I didn't have an end game really in mind. I certainly started thinking about pretty early on, is this business can we franchise it? Or could we, go into other markets and duplicate what we did here in Des Moines, Iowa? And quickly realized that we were really, really good at getting work done. We were good with our people and leadership, but our back end systems lacked so much. And that's where a lot of companies fail. And we realized that we, didn't have we just weren't great on the back end as far as software. We weren't collecting we weren't getting our bills out on time, which means you're not collecting on time. And so there was a lot to learn there. And we didn't really get those systems in place until we were almost a $10 million company. And we had a year where we did about 10 million in revenue. And we actually lost money. And that was very, very eye-opening to me. Probably the best thing that ever happened to me, because it forced me to really take a look at the business, what service lines we offered, who was our ideal client, what does our business model really look like, and who can we best serve? And because we were just doing everything for everybody. I mean, we did everything, and residential, commercial, you name it, we did it if you asked for it. We were cleaning windows, sweeping parking lots. And so we had to get smart with our business and really focus on the back end systems. And, at that point, we hired a CFO that we brought in, and she was really sharp, and she helped get a lot of things all the way down to just, employee handbooks and what's our hiring process and what's our orientation look like, and, what type of training do we do, and every aspect of it. We were pretty sloppy. I've said this on a lot of podcasts, so sorry if I'm repeating myself, but we had stuff insured that we didn't own anymore. We had guys that had cell phones that we had terminated, and they still had a company cell phone. We just grew so fast that we really got sloppy. And so to answer your question, I didn't really have it like, hey, we'll build this up and sell it. It was, let's just build an incredible brand. Let's try to have a great culture, great core values. Let's make those core values known by all. Let's post them up in our facilities and make people feel like they work somewhere special, and treat them with respect, and give them safe equipment, and then go out and do great work, because you can sell all day long, but then you got to execute.
In your opinion, or maybe you were told by the company that actually bought Perficut, what was the most appealing thing about acquiring Perficut for them?
Yeah, so just real quick, Perficut was not for sale. We had no intention of selling. We actually we kind of call it a partnership, but a Heartland company out of Kansas City. I think they own about 18 companies in the U.S. in their platform now. They just kept reaching out, and we said, we're not interested. And Matt finally said, I'm going to go have coffee with their guy that's in charge of mergers and acquisitions. And he said, hey, I think we should maybe explore this. And so they loved they're always looking for the market leader, which we are in our area. And they just loved our culture, our brand. And so all the things that we've done for 25 or 30 years that people didn't think matters, they all matter. I love, Matt was just on a podcast on the Green Grind with us, and he goes, everything matters. And that's so true. When guys are like, well, that's not that important, and that's not that important, it all matters if you want to build a great company. And so they loved what we did as a company. They loved that we were in 3 different markets. So we're in Des Moines, Omaha, and then Cedar Rapids, Iowa as well. So we've got a pretty nice area here. We do a lot of maintenance. So companies that are looking to buy like the residual cash flow versus, if you're just a hardscape company or just a landscape company, great business, very profitable if you do it right, but you're only as good as that next install. And so they love our snow and ice management and our maintenance because they want that residual cash flow. And so, for us, it just made sense. It was it was the toughest thing we've ever done. I mean, to sell something that you started from scratch. I'm still involved. I'm still on our strategy team. Nothing changes. So one of the things that we really liked about their platform was, back in the early 2000s, late 90s, there was a lot of mergers and acquisitions. They'd come in to a company like Perficut, and a Brickman would buy them, and all of a sudden the trucks are tan, and the guys are wearing different uniforms, and all the policies changed, and it failed miserably. And a lot of companies went back to the original owners. A lot of companies failed. And what I love about their model is they said, we want you to do nothing different. The only difference is they own the stock and I don't, right? So we really wouldn't even have had to tell our employees. Nothing looks different to our clients. Nothing looks different to our employees. But where the real value is, and I talk to guys a lot about this, is, having clean books. Our books were clean. We weren't ramrodding personal stuff through. Guys have their boat and their Corvette and they buy a grill and their books are a mess. Our company books were clean. We had a great business model. We have great clients. Everything's in contract. Employee handbooks and safety and all the things that really are turnkey. If you're running your own company and you're wearing all the hats and you're not there's not much value. And so Matt and I had stepped out of that, and we've surrounded ourselves with amazing people that we empower to make decisions daily and run the company. And so, for us, it just made a lot of sense. We'd done this a long time. Financially, we were in a good spot, and it took a little risk off the table because both of us were like, we do tree service. We got guys up in boom trucks, and what if somebody were to get killed and they're going to sue me and the Perfect Cut and Ballard Products? And so, for us, it just made a lot of sense. And again, our entire goal from day one is how do we make sure we take care of our people? How do we make sure we take care of our clients? And when they say nothing's going to change, is that true? And so we talked to a lot of other companies that they had bought, and they've said, hey, they've done everything that they said they would do. And to this day, we've been 2 years now, almost 18 months since we sold. They've been a great partner. And actually, there's been some benefits as far as, just because of the size, we can buy equipment cheaper, a little bit better healthcare program when you consolidate into thousands of employees. And but yeah, I don't know if that answers your question. For us, we were never for sale, though. It just made a lot of sense. And I don't regret it, but there's still days I see blue trucks drive by me every day, and I still tell people, I'm like, yeah, they'll say, do you own Perfect Cut? I go, yeah. And then I'm like, no, actually, I don't. I don't own Perfect Cut. And they're like, what? And then I don't want to tell them the whole story. I'm like, but it's been a great partnership, and it's been a great situation for our entire team. Matt Bowman, my business partner, stayed on as president. I'm still on the strategy team, as I mentioned. We're running it just like we were running it before. And that's what they want. I've even said, what do you want us to, guys, what would you like us to change? Or Matt says, what do you want us to change? They say, change nothing. You guys are killing it. So that's what we do.
We want to take a break from today's episode to thank our sponsor, Cycle CPA. It's crucial to review your financial statements on a monthly basis so you can diagnose areas for improving your business's financial health early before they become significant issues. Too many contractors wait until the end of the year to review their financials as they file taxes, when it's often too late to take action to change the outcome. Cycle CPA not only handles bookkeeping and taxes, but they also ensure that you're armed with financial data on a monthly basis to make key business decisions. They offer benchmarking, cash flow forecasting, and assistance in developing targets for financial metrics. With their team of accountants specialized in the hardscape and landscape industry, they currently work with hundreds of companies in this field. Visit cyclecpa.com, and for $200 off, mention the How to Hardscape podcast. Now back to our episode. Now, after that last question that I asked Corey there, I asked the same thing to Tony Bass. He is the author of the E-Myth Landscape Contractor Edition. And I just asked him, what was the appealing factor for the person that bought your business, the entity that bought his business? What was the appealing factor of that? And this answer just has always just stuck in my mind quite a bit, especially when it comes to building a business and the team involved with that. With something that just came to mind with your selling of your business, was there any communication between the buyer and yourself as to why they wanted to purchase your business? Was there something about the business that was desirable, whether it was a system or the brand or whatever you'd created there, whether it was during the sale or afterwards, you were able to ask them, why was it my business? Is there anything that?
Well, that's an insightful question. And because you said, was there anything before, was there anything after? And I will tell you that in a transaction where you're going to sell your company, it is a negotiation. And the information that is provided on the front side of that negotiation will be different than the information that's provided on the back side of that negotiation, guaranteed. There's competing interest. And so you have to be very careful about how you orchestrate a transaction. Now, when the prospective buyer told me he wanted to come and inspect and view my facilities, I thought he wanted to look at my office and my equipment and the computers and the desk and the chairs. And so we made sure that the floor had been swept and the desks were as clean as possible. After the transaction was over, he admitted to me that visit had absolutely nothing to do with the physical plant, the physical facilities. He wanted to look into the eyeballs of my employees. And he wanted to see if I really had a team there that was capable of coming in and opening the doors and following through on getting the estimates written, following through on getting the jobs executed, and following through on getting the darn money collected. And so he was very, very interested in the quality of the people, in the amount of time they had been with my company, and he was interested, and I'll tell you this, he was interested in their physical appearance. He wanted to know that these people looked the part of being a professional manager of a lawn and landscaping business. The investor that purchased my company did not intend on, nor did he ever plan on coming in and opening the doors or closing the doors in the afternoon or working on any of the equipment that might not be ready for the next day's work. He had no intention of doing those jobs, no desire to do those jobs. He wanted to make sure I had a team there to do that. And depending on your ability to recruit and find good quality people and then hire them with fair and appropriate compensation packages, and then retain them by continuing to challenge them to learn new things, to become more competent in operating your company and the technical side of the business, and ultimately being able to represent the company in the eyes of the customer in a professional way. That's where you're going to build value. That's where you're going to build value for exiting one day, Michael, that they probably don't talk about very much.
Now, at the end of the day, for a project-based business, we do need to be profitable. So we're going to take a small turn here and talk about profitability. And the very first thing that came up when I thought about this topic was my interview with Stanley Dirt Monkey Genetic. And this was back in 2020. So this is really going back in the archives. And he talked about how we need to be as profitable as possible, especially for a project-based business, and for the work that we do and the assets that we have to spend money on, and so on and so forth here. And his answer on profitability has always kind of stuck with me here. Starting with that plateau, when do you know that you are at that plateau? How many years might it take for you to really understand that you've hit this plateau and you need to take action to get to that next stage?
So I want to challenge the guys and gals listening to think that they're always in a plateau. And the reason I say that is there's always the potential to grow beyond where you're currently at. Even if you are at an accelerated rate of growth right now, there's always the ability to break beyond that. And when I say growth, I want to be very cautious because there's a lot of misnomers out there about, 10X. And that's one of those pet peeves I have is contractors. They read the books and they hear all these guys barfing out 10X this, blah, blah, blah. As contractors, we got to be very cautious about 10Xing anything simply because our overhead is so astronomically high. If we want to 10X or grow our business, we've got to invest in people. We've got to invest in equipment. And sometimes our equipment doesn't cost $100. Sometimes it costs $10,000. Sometimes new equipment costs $100,000 or $250,000, $300,000 to retrofit or outfit your company with a brand new crew that can go out and grow and expand. And so I want to caution guys about growing too fast, but I want to encourage them to continue to grow. And what I'm actually talking about is growth in a prosperous way. Grow your profits. Don't just grow for the sake of growing, because that can lead to collapse. And I say this from absolute experience. I've lived through economic downturn after downturn, and some of my most profitable years have been the worst years in United States economic history. And what I'm actually talking about is those recessions, those dips where all of these companies are disappearing. There's a way that you can actually profit from even those stages. So I want guys to grow their profits, grow their net before they grow their gross. Once they've mastered their net, once they've mastered their profits, then start to focus on growing your growth. So whatever stage these guys are currently at, I'm going to challenge them to not take on more work, not take on bigger projects, not go bigger just for that sake, but to do the same work that they did the last year, but see if they can double their revenue. See what it takes to become hyper profitable. And once they've learned that, because there's always a way to refine your business. There's always a way to take your business to the next step without adding extra expense. And that's by refining the processes, by improving the profitability on the jobs, by cutting down the time it takes to do those jobs, by creating a system so that when you go out and you look at a project, and then there's guys right now talking at me in the radio going, yeah, but I don't ever have any two jobs the same. If that was true, then every single job you took on, you would need new tools, you would need new skills, you would need new guys. There's a lot of underlying relatability from one job to the next job, and that's what you've got to focus on. And then what you've got to learn to do is tweak the nuances of each job to improve your productivity on those projects. And once you start to understand that, you can then almost take a look at all of the different jobs and projects that we take on as blue collar contractors, and then you can almost start to set and refine certain characteristics that are a common thread from one job to the next job. And when you find those common threads, you can then refine those and improve the profitability. And this is a huge thing, because it's not going to come like that. It's not going to be an instant thing. It's going to take season after season. Kind of an interesting question. I was talking with my co-owner of my company. I literally gave half my company to him. He deserved it. He earned it. Amazing individual. His name is Tim, but he's not as good of a manager as I was. And he asked me point blank. He's like, when did you start to really make money? And I said, I really started to make money, Tim, when I fired half of my crew in 2008. And, he was part of there. He was in that business. But even being inside of it, he really wasn't taking the meat of what I was saying. So I had to break it down a little further. It says in 2007, we were doing, millions of dollars a year. We had 5+ crews running. And in 2008, before the economic downturn, I decided that I was going to fire half my guys. I was sick of the business, didn't want to have it anymore anyway. Why bust your butt just for the sake of busting your butt? There's got to be a better life out there. And so I made a radical move. And what my radical move was eliminating half of my guys and then cherry picking the best jobs. But on top of cherry picking the best jobs, by eliminating half of my guys, I freed up or doubled my own time. I doubled my own ability to pay attention to the existing projects that I was on. And then I looked at every single one of those projects and began refining the process to make those projects more profitable. And in the first year, it didn't make a huge difference, except for the fact that I did half of the work in the beginning of the recession and had the exact same profits that at the very first year of the recession that I had at the last year of the economic boom. So 2007 was like the last big year of the economic boom. My profits were equal to the first year of the recession the following year. And even though I did half of the gross.
Hey, are you planning to attend HNA Hardscape North America, October 22nd to the 24th in Louisville, Kentucky? Well, you can use our promo code VIPHTH to get 50% off your tickets, or you can click the link in the show notes below to register for this. I've gone the past 2 years. It is awesome. A massive trade show along with the Equip Exposition with more than 1,000 exhibits, 42,000 square feet hardscape house, as well as a 30 plus acre outdoor demo yard that you can demo equipment. There's the H&A awards ceremony. There's lots of educational sessions throughout the day, and there's more than enough events before and after the trade show itself. I've always enjoyed my time. I'll see you there. Use the code VIP HTH to get 50% off your tickets and register sooner rather than later, because tickets do increase leading up to the show. Now, Stanley's answer there on profitability is very much in tune with Sean Van Dyke's Profit First for Contractors, that whole entire book. And we've had Sean on the show a couple of times, and initially first talking about that profit first concept, to make profit first. Profit comes first in your business, which is always interesting to me when I had George Avari on the show for the episode titled Profit Comes Last. And that is something that he touches on in this sound clip. And this is a specific one that continues to stick in my mind, even though it's a fairly fresh episode, probably within the last 6 months or so. It is something that continues to stick in my mind, that he asked the question, would you trade profit for more time? Would you trade profit for less frustrations and stress? And in that case, then profit comes last. It is the reward once you are doing things right in your business. But don't be afraid to sacrifice a little bit of profit in order to get more time, in order to relieve some stress in the things that you have to take on as a business owner in your business. So this sound clip has always stuck with me here.
And then so when you add somebody to the office and their overhead, there's what's called revenue offsetting overhead. So now we've set up our chart of accounts itself. It's actually not adding anything to your business, and actually is buying you time. So, when you think about investments and returns, there's dollar returns and there's time returns. And sometimes the times don't translate into dollars. So actually, I think there's three currencies. Grief's one currency. Time is another currency, and dollars is another. And so a lot of people are focusing on the dollars only. But man, if you can get rid of the grief and you get your time, that's still a massive win, irrespective of making more money, right? Now, the beauty is that you will make more money when you actually have time to think and you strategically plan, because you're going to be focusing on an investment. And so, it's just, I see people that can't even find that, they won't even sacrifice 3 days to solve all of their tactical problems, pretty much forever, to set up strategy. And so they're in the cycle where, like, we used to do, some people who called me from Instagram, and then we cancel their meetings because there's a fire to put out. And, so we one of the things we did is we started offering, Saturday and Sunday consulting. If there's that much firefighting going on, we'll help you out on a Saturday and Sunday to get you over the hump. But to avoid it and not do it is the worst mistake. And generally, your return on investment is at least 1-to-1, oftentimes 10-to-1 when you plan strategically. So you go into a company, you're like, oh my God, I did this, and then next year my profits went up by this. Or you know what? My profits didn't go up, but I stressed 500 hours less. Hey, that's a win. Or you know what? Sometimes what happens is all your employees get more money first before you get any money, because then your turnover goes down. You keep the good employees, you get rid of the bad employees. You didn't make any more money, and then you start to make more money because you become more efficient. So it's not like this, therefore that happens. It's like this, and therefore that happens. So the sum of 3 or 4 things equals the end goal that you're going toward, not an immediate ROI. Now, getting rid of waste is a whole other matter. So eliminating waste from your business, that's strategy as well. And how do I make that happen every day? And I see there's a company that, 5 years ago, I said, do this, and this. And in their mind, it only saves me $50,000 a year. If you can think, just think about most of us, like 50 grand. For them, it's not a lot of money. Okay. But I'm like, no, hold on. 50 grand times 10 years, 500,000, right? Plus the interest at 5% on 10 years is 750,000. So your cost was 750,000 for not doing that. And by the way, the opportunity cost of not doing that is something you could have done with the 750,000 that would have made you even more money or made your business better. So like, accepting mediocrity or like we can't do this because, so preconceived notions is the biggest handicap. And I've started to do a lot of work on leadership now. You sort of think of leadership deficits and leadership, or not deficits, but like credits and what's the opposite of credit? Debits, right? So when you look at your team, like who's on your team, every time you make a leadership mistake because you haven't learned to be a leader, it's costing you huge. You don't even know it. And as a matter of fact, the biggest cost is the opportunity cost that you don't even see. Strategy is how to win the game, and tactics are absolutely necessary. So tactics are something you leverage when something bad happens, or when there's an immediate opportunity that you can turn on with little effort. But if you're living in a tactical world where you're essentially putting out fires and looking at shiny objects, your world's never going to get better. And 99% of the business operate in that world. There is a reason there is a 1%. And if you're an extrovert, you're going to have an epiphany and say, holy crap, I got to change something. I got to do something different because this isn't working. And I got to put some money to it. If you're an introvert, it's going to be a slow realization, and then you're going to do it. And oftentimes, sadly, in businesses, you might see generational transitions where the younger generation is more tech savvy. They're sort of more in tune with the times. And the older generation is just like this giant anchor holding back the ship. And it takes 2 or 3 times at least to convince people to pull the trigger on making big changes. And it's just so painful because I know, listen, I've got, not only do I have the Advil, but I've got the vitamin that's going to make you stronger. And it all comes down to strategy.
You mentioned profit last and focus on, saving your time, saving your stress. I think a lot of people first, they focus on revenue, and that's what you hear, like the flashy number, high number, get revenue. When they come to the realization that profit is more important, then they talk mostly about profit. You're the first person that I've heard talk profit last, and not that revenue was in that list, but focus on your time, focus on, your stress, profit will come. At what point then, where does profit play into factor for a business where it's like, okay, we weren't as profitable as we wanted to be because, we were focusing on getting back our time, saving our stress. At what point in time is it time to flip that switch and become profitable, focus on that profit rather than time and stress?
Well, I would argue that profit is a byproduct of doing everything well. And so that's your reward for being smart. That's your reward for planning. So I'll give you a couple of examples. The first thing I do is I'll whip through a P&L, and I can red flag. I've done 1,000 P&L, so I can red flag every mistake, every misallocated dollar in about 20 minutes. It's hilarious. I'm like, don't do this. Spend less on this. So cut in smart ways. So I think one of your other guests was talking about discretionary spending as opposed to variable and fixed. And so I look at discretionary spending. I don't like discretionary spending. I want you to spend on what you have to spend money based on urgent and important. There's no, an extra $5,000 for that trip, or, we're going to go on this, mastermind or this, learning journey or whatever. It's like, well, no, that should be in your budget. And is it discretionary? And what's my ROI on it, right? And so I look at everything in terms of ROI and opportunity cost. If I did this instead of this, what would happen? So, strategically, and this sounds simple, but the first thing I do is go to P&L and I do an operations tour and I go sell all this. It's like you've got all this money tied up and it's holding you back. It's depreciating. You don't even see it. And you think because you own it, it's paid for, it's good. Believe me, I can do way better things with your money. I could take that $50,000 and put it into the bank and get a 5% interest, which would be much better than depreciation. that you don't see. So number one, get rid of your crap, get rid of your crappy people, right? Come up with a plan on how to do it, offer everybody the chance to change, and then execute.
Knowledge Tree Consulting, George and Peter of Oriole Landscaping. You've heard me talk about them on previous episodes. They have an event coming up August 19th to the 20th. This is going to be a behind the scenes tour of Koivik, a second generation multi-division firm known for operational excellence and exceptional results. I went to a Knowledge Tree Consulting event last year. That was with Earthscape. You've heard me have Sam Bauman on from that business, and this was a really great event. I cannot recommend this enough. The first day, there's going to be a welcome reception and an optional networking dinner. The next day, early in the morning, departing for Koivik, doing the facility tour, which includes the shop, soil production, specimen tree nursery, office operations, and client experience. So you rotate through those different areas. And then after that facility tour, back at the hotel, there's going to be strategy sessions and then an evening dinner. This is in Toronto. The shop is in Milton. And there's going to be a link in the show notes for you to get 50% off your tickets through the How to Hardscape podcast. So click that link, learn more about that event, and register today. And then finally, this last sound clip is Sam Bauman from Earthscape. And this has stuck with me just because of how transparent Sam was talking about his 2022 to 2023. And even he was a $11 million business. And in 2022, I believe it was, maybe it was 2023, they got hit hard and they weren't getting as many leads as possible. They had set their budget. They weren't hitting their budget goals and they really had to take a step back. And that meant restructuring their business, laying people off, and the difficulties that come with that, but also the lessons that he learned from that. And it's just a reminder that you could be a well-oiled machine and you could have a plan and you could be really working hard towards accomplishing your goals and moving through that plan, but there could still be things that come in the way that have you take a step back in order to take 2 steps forward in your business. And today they are well on their path. They're an employee-owned business as well, so they are a part of an ESOP. And just this is why this sound clip has always stuck with me. Your last year, I think it was, in your discussion, you talked about how things were, you definitely saw the sales coming down. And at that point, I think you mentioned that you really had to step back into the business. And, you know, your day-to-day today looks very different than it did a year ago because you really had to step in. And I think you had to put on the sales hat again and really go full force in that. What was that year like for you, and how did that change Earthscape compared to, what was that, 2022, compared to 2023, and then where you see Earthscape going in 2024? How did 2023 kind of affect Earthscape in general?
For sure. So yeah, 2022, we had our best year ever. We did around 11 million in revenue, it was like 15% net profit. Things were great. And we started seeing a slowdown late in the year, but we were kicking butt. So we said, we're going to keep growing, even though the leads were slowing down. We saw some signs, like I said, we're going to keep growing. And so we planned for that. So we added more overhead positions, but the leads weren't coming and leads dropped off 40%. 2023 was a really bad financially, it was a bad year. We basically ended up between 1% and 2% net profit. However, I'm very, very thankful for that experience. I wouldn't trade that for the world. Maybe I would trade it for the world, but it was a really good experience for me. It was a good experience for our team, and really it forced us to make a lot of tough decisions and get back to being lean and mean. All of that to say, like, this year we're having a good year. We'll be around probably 14 to 15% profit, but we wouldn't have got there if we wouldn't have made the tough decisions of last year. And yeah, we had to, the reality is, some of the advice I got was, hey, if you have to make money. So we're in order to be a sustainable business, you have to be profitable. And we weren't, you can't look ahead to 2 to 3 years from now and say, well, once things wash out, we'll be able to correct and be profitable then. No, we have to be profitable now. So that forced us to make some tough decisions with letting some of our people go in 2023 and really dial it back. In hindsight, I should have made a lot of those tough decisions sooner, but that's okay. That was a learning experience for me. And by the way, it's really big for me when I make mistakes that everyone else knows about it, so that they don't make the same mistake. And I really try to encourage that here at Earthscape. I think it gets harder as we grow, and we all have me as the I need to constantly I shouldn't say if I make mistakes, when I make mistakes, and I make a lot of them, that I can be open about that with the team and hopefully encourage them to do the same thing. So yeah, any more questions on on that?
I do. I have lots of questions on that. Because I do talk to a lot of contractors North America wide, and it seems that they're feeling that same slowdown this year. And I get messages like, what do I do in these situations? Not just, I would assume the employees that you were laying off were more overhead positions, not so much the labor producing positions, or if you were really slow on work, it was the labor producing positions that need to go as well. And guys are kind of starting to think about those decisions, maybe making those decisions this year, as well as really needing to get leads. And that's one of the most difficult things as well. Paid ads will go up in price during that time when things are a little bit more slow and there's more people wanting to advertise and so on and so forth there. So with all that being said, and anything that I touched on there, anything that you want to comment on, as well as what did you do to get the ball rolling with leads to come into Earthscape during that time and even into this year, and why if 2024 has been similar to 2023 with work, how has Earthscape remained even more profitable than they were in 2023?
Yeah, this is fun. I like this topic. So just digging into last year, like we have to be profitable. So in order for us to be profitable, we were missing our revenue targets by 30%. That's what the financials were showing, and we didn't think we were going to correct that right away. So if your revenue is down 30%, you got to cut 30% of your costs. That's the tough thing to do. And I'm so glad we made that decision. And because if we would have kept everyone, this year would be probably pulling a smaller profit as well, because we actually had to, let go some overhead, let go of our C and D players on the production side of things too, because we had too much staff. So if your revenue is down, expenses have to drop with that. And it is very hard to cut costs when revenue is dropping. So, our first meeting with the executive team was looking at our org chart and saying, okay, what are we going to do? Who are we going to let go? And these are very tough conversations, but they're very important. And our first kick at it was we had one name. We had one name, but really we had to let go a lot more than that. And so it was like, okay, that's not enough. So let's like keep going at it. So you had to keep coming back to the conversation. None of us want to let people go. And but eventually we had to like keep coming back to that same thing. So we came up with a list, made that decision. It was actually a termination. So in Canada anyways, like if you lay someone off, a layoff is the intention they're going to come back at some point. But we knew realistically there wasn't any coming back, at least not in the next couple of years. So termination, then they get their severance, and that's just the right way of doing it. So that was that was the big thing. So another big piece of advice I would have that we were learning is we were starting to cut people's hours across the board. So it's like on the production side, so hey, our backlog's shrinking. No, cut out overtime. So no overtime. That was okay, except the big issue is you're actually, especially if you have C or D players, you're now keeping your C and D players busy, and you're sacrificing your A players their hours. So my advice there, and our takeaway was, if you got C or D players, get rid of them. Get rid of them and then make sure your A and B players are happy and you're giving them lots of hours. Now it's still not endless overtime and things like that, but don't sacrifice your weak links for your A players. And so that was another big thing for me. And I would encourage people to maybe look at that. Hey, if you've got all A players, Wow, good on you. That's incredible. You've got a problem that we don't have. And that's a good problem to have.
Thank you for listening to today's podcast episode. I really appreciate you tuning in each week to the How to Hardscape podcast. And I'm going to link each of these full-length interviews in the show notes if you do want to check them out in their entirety, if you haven't gone back and listened to our entire catalog. And if you enjoyed this, you can give us a rating and review, Apple Podcasts, Spotify, wherever you can. That really does help us here. And any other topics that you want to hear in the future or guests that you want to hear on the show, send me a message at How to Hardscape on Instagram. And before we leave, we want to say thank you to our sponsor, Cycle CPA. If you're looking for bookkeeping, accounting, CFO services, reach out to Cycle CPA at cyclecpa.com. Let them know How to Hardscape sent you for money off their services there. PatioSEO.com. And now you know Patio SEO can take your hardscape business to the next level. James Reed and his expert team have built a reputation on success, not just for their own companies, but for hundreds of others just like yours. So don't wait. Visit PatioSEO.com to learn more and get started. But also be sure to follow James's journey on Instagram at Road to 100Ms. That's Road to 100MS for behind the scenes tips and insights. And I do recommend checking that out and following along to that. Ready to build your brand? Patio SEO is here to help you every step of the way. August 19th to the 20th, Knowledge Tree Consulting is having another event at Koivik. This event is in Toronto. Koivik is in Milton. I went to their event last year with Earthscape. It was awesome. I can't recommend this enough. There's going to be a link in the show notes for you to sign up for it and get 50% off your tickets today. If you're planning to go to Hardscape North America in Louisville, Kentucky, October 22nd to the 24th, you can use promo code VIPHTH to sign up, get 50% off your registration. That also gives us a little bit of a kickback and helps us here at the How to Hardscape podcast. And we look forward to meeting with you next week on the How to Hardscape podcast.